we are going to move into a more like showroom retail stores and giving the chance to the consumers to buy, but not the need to carry the product also while they are walking across the mall. They just can buy the product and the product could be sent directly to their homes.
Hey gang, it's Thursday, July 22nd. Christian, Matteo and listeners, welcome to the Behind the Numbers Daily, an eMarketer podcast made possible by VTEX. I'm Marcus and today I'm joined by two people. First up, we have Cristian Serrano, who's the e-commerce general manager for the Americas region for Tekmovil, a VTEX client.
Hey Marcus, how are you? Thanks for having me. It's a pleasure to be here.
Terrific, yeah. Thank you so much for taking some time to hang out with us. We're also joined by Matteo Ceurvels, who is our senior analyst covering Latin America and Spain.
Hey Marcus, great to be here.
Hey fella. So today's fact before we start the episode: where did Starbucks get its name from? Well, when the first Starbucks opened in Seattle's Pike Place Market in 1971, it didn't sell coffee drinks, just beans. The name, inspired by Moby Dick, evoked the romance of the high seas and the seafaring tradition of the early, I've said that wrong, I think, I'm definitely mispronouncing that, of the early coffee traders. So the founders named the place after Captain Ahab's first mate, Starbuck. I still don't quite understand the connection here, but that's what they settled on.
Interesting. Oh.
Don't even get me started on the logo. It doesn't make any sense.
It's the mermaid in the sea.
Yeah, it's just something that's just, it's just the logo and everyone accepts it. But then you look at it and it's like, it's like a siren from the ocean. And I don't, it doesn't make any sense. Anyway, that's why what it is. That's why Starbucks is called Starbucks. Today's real topic: launching an e-commerce business unit during the pandemic. So we are talking today, as I mentioned, with Christian. He works at a company called Techmovil. So let's start by explaining, Christian, who they are. What do they do?
Yeah, thanks, Marcus. Well, basically, Techmovil is a technology distributor. We manage several brands such as Xiaomi, Bang & Olufsen, Kodak, Acer, Senhua, all across the region. And basically, our business model, it's a B2B distributor for these brands. We manage the brands with their wholesalers, retailers, or other partners in order to maximize the position in the market. So basically, that's who Techmovil are.
And your role at the company, I mean, we already read your title out, e-commerce general manager for the Americas regions. But what are you doing? What's your mission for the company?
Well, basically what we do, Marcus, it's to manage all these brands with our retailers and partners on the digital channels and also to manage our own and operated channels, the .com sites for these brands in order, to give to our consumers the best market experience for these brands.
And when you say managing these brands, I mean, I imagine like every other business, the pandemic has changed things dramatically, or maybe not, maybe in greater ways than others. But what was the main way the pandemic changed your business?
Actually, I think it's to launch this business unit. Basically, in the past, we used to be just B2B. And 1 month before the pandemic situations boom, we launched our e-commerce business unit. So I think the main change through this COVID situation was to start operating B2C through online channels.
So you launched the B2C part 1 month before the pandemic?
Yes, exactly. So I think it was the best moment for us to launch it because
incredibly fortunate.
Yeah, totally. And actually, I used to joke sometimes with my fellows regarding that this COVID situation became, I think, the most successful acquisition campaign for online consumers, right? Because, the physical world was closed. So there's no other way to buy groceries or whatever thing you need if it's not online.
You're like the Disney Plus of your industry. Yeah. That was incredible. Like the timing is absolutely perfect. And how was that experience launching that a month before the pandemic? How did that play out?
Well, it was a little hard. Also, we were like working, a lot of hours. We also create the team through this pandemic situation. So basically, my team doesn't know each other in person, right? All the team was gathered up through the screen and start to set up the processes of a B2C business model in a B2B company. So it was very, very hard at the beginning. because everything is changing. There was a lot of uncertainty at that moment. No one knows what is going to happen. At the same time, you are, struggling with all the problems of the physical world that, all the POs for the retailers and wholesalers are like just shutting down. So it was a totally mess. But actually for us, it was like helpful because all the resources was focused on our business unit. So I think it was I don't want to say like it's a good moment or a great moment, because obviously this is a very, very tragic situation where we all went through. But I think it was a good moment for the company to start thinking about the B2C and to put some efforts on the online business.
So aside from the logistics of it, of the fact that, you were setting all of this up remotely, what was the biggest challenge when it came to the B2C part of it, to selling to the consumer as opposed to the business?
The thing that was more complicated, if I can say it like that, for us, it was to gather all the teams together, because it's not just the business unit, is to start working closely with all the, just your cross-functional areas and help them to understand this new model business or this new way of work that you need to set for a B2C business. But I think in a couple of months, we were like up and running and ready to sell, and actually selling at numbers that we didn't figure before, right?
And so how big is the B2C part of your business now, and how big are you hoping to make it? Is this something that you're thinking is going to be a minority revenue stream for you, or are you looking to grow it so it can rival that B2B business?
I think we can grow. Obviously, we are going to be still a little just part of the pie. But right now, for example, we represent 8% of the total business, and we've been up and running just for a year and a half. So I think this is great numbers.
Yeah, absolutely. How have your customers changed over the past 18 months or so? How have you noticed their behavior changing?
Well, I think if I can say it, we have right now a more professional consumer, if I can say it like that. They have more knowledge regarding to buying online. It's a more analytic consumer that go through different websites, different parts. Also, they can go to sites all across the world in order to find what they are looking for. So I think we have a more experimented consumer right now.
Yeah, one that can do a wealth of research before the purchase. Absolutely, a much more informed consumer. Matteo, what kind of consumer behaviors have you seen in the region, in Latin America, that kind of bubble up to the surface for you? Are there kind of one or two that really stand out in terms of how consumers in general have changed in the last 18 months?
There are several that come to mind right away, but I say the most notable ones, I'd say, generally speaking, and obviously there are some differences on a by country level, but we did see a big surge in activity from new consumers coming from outside of urban areas, notably in more rural areas or from lower socioeconomic backgrounds, preferably, let's say, middle class or lower middle class consumers trying to buy online for the first time. We also saw mobile went from kind of being this device of research to actually a device of purchase. And again, this was a trend that was happening in the region well before the pandemic, but it was just a further acceleration of the trend.
Cristian, how do you see those changes playing out going forward? Do you see a lot of them sticking? Do you see customers wanting to revert back to an old way of doing things and following them in that direction? I was reading something recently that was talking about just the idea that the old world is kind of gone and you need a new playbook for a new world, because consumers are different. We are different. We're different than we were 18 months ago, even if individually we think we might not be. The way we work's changed, the way we buy things changed, the way we entertain ourselves has changed. How many of these behaviors that you've seen changing from your customers do you think are going to stick?
Yeah, totally, Marcus. I think there are some things that are going to stay. For example, when you prove the easy way to buy groceries online, and you don't need to go to any big store and, spend maybe an hour of your day doing that. Maybe there are some things that the people are going to stick to that. But I think also we are persons and we need that interpersonal communication and go to the store and maybe just to interact with someone. So I think that for some verticals maybe and some kind of businesses, there are things that are going to change, that are going to go back to what we used to do things. But also there are another ones that are going to change completely. I think also the retail is going to change. My assumption and my point of view is that we are going to move into a more like showroom retail stores with more space, considering these social distancing and everything, and maybe to maximize the inventories, maybe to be able to have the most important products in store, and to take leverage of that product and give them a great experience with digital signage, with screens, with a lot of interactions, more in terms of experience, and giving the chance to the consumers to buy, but not the need to carry the product also while they are walking across the mall. They just can buy the product, and the product could be sent directly to their homes, and also to maximize the inventories at the warehouses, because we also saw that when the pandemic situation explodes, all the physical stores was closed, and actually a lot of product were in the stores, and you cannot access to that stores. So you are losing a lot of money, or you have a lot of inventory just seated at those stores that you cannot move.
Mm-hmm. So you said you manage a lot of different brands. You mentioned Xiaomi, Bang & Olufsen. Is there any one of those brands that stands out to you in terms of just an interesting story, an interesting journey the last 18 months in terms of what they've had to navigate or how that business has changed?
Yeah, I think Xiaomi is a great example. Xiaomi, it's a technology brand that it's always looking for innovation. So I think we try to connect with that innovation, understanding the consumer trends, where they are going. And for example, we launched and we tried through these 18 months in the pandemic situation, for example, live conversations. We try and we are looking to create pop-up stores with digital screens without any human interaction, in order to let the consumers that want to go to the mall and to still have this social distancing thinking, and do not want to interact with anyone due to the COVID situation, to let them live a retail experience, a shopping experience, but without people. So we are trying those things, and also the brand is pushing a lot in this kind of new tests. So I think that's remarkable that a brand understands what's happening, trying to understand the consumer, trying to follow their trends, and do some actions and try to run some tests in order to see if that's the right way to connect with the consumer.
Yeah. Matteo, in general, I mean, it's a very big region, a lot of people, but what share of shopping is done online? Is it more like a China, where they are ahead of the curve and you have a large minority of shopping being done online, the UK, an advanced market in terms of e-commerce share of total retail sales, or is it more a little bit kind of further back, maybe like the US, maybe 1 in 10 purchases being made online? Where does Latin America stand on the whole?
Right now, it's the region, it's about sitting at about 11%, more or less. But that's essentially a big doubling of what it was in previous years, where it was hovering around figure 3.5% to 5%, give or take.
Wow.
So yeah, the fact that it surpassed that 10% mark for the first time is really notable.
Yeah.
However, when we look against China, for instance, I mean, there's no comparing, that. I think China this year's e-commerce is going to represent a little over 47% of the entire retail market. So
yeah. So as Cristian was saying, I mean, giving customers a chance to go back to a store to interact with a product, but maybe still being able to maintain the social distancing, not wanting to maybe deal with an associate, but still wanting that in-store experience. Are we seeing in the region people wanting to flood back into stores, Matteo, or are people quite comfortable to continue this online buying trend?
Absolutely. I mean, in-store shopping is definitely something that's still going to be here to stay for the foreseeable future, and it's just going to be a matter of a very omni-channel future and a very fluid and fragmented experience, in the sense that there's going to be so many different touch points, because at the end of the day, the consumer just sees the company as the company, irregardless of what channel they're shopping with them on. So they're expecting the same good experience, no matter if they're interacting online or in the store, or a combination of both. It's one shopping experience. You
mentioned that 11% for the region of online sales as a percentage of the total. Where's that going over the next couple of years? Are we expecting that to flatten out, and maybe it can only get to like 13, 14% in the future, or are we expecting to see a continued kind of ascendancy of that?
Yeah, I mean, it's definitely growing. I think we're not going to see this massive spike as we saw with the past year. I don't think we'll be seeing that. But, as it stands right now, we're expecting the region to hover around 13.5% by the end of the forecast period in 2025. So it's definitely seeing incremental growth. But, it's again, growth off of a year of impressive surge in sales. So it's a matter, we're growing upon that already heightened base of sales. So far, even looking at preliminary data for the first quarter of this year, we're still seeing very strong growth out of e-commerce. I'm sure Q2 is going to have equally as strong growth once those figures are released.
Positive early signs. Christian, we come back to you for the last question of the first half. So what do you see as Techmovil's biggest challenge over the next 6 months?
To be honest, Marcus, I think the biggest challenge for us, and I think it's for all of the companies, is to understand and to be able to fulfill consumer expectations. I think that during these pandemic situations, big retailers or online retailers like Amazon, for example, actually set the bar very high in terms of experience, in terms of service, in terms of everything. So I think that our biggest challenge is to try to compete there in terms of service, in terms of deliver that kind of experiences, in order to win consumers, loyalty, hearts, and also trust, right? Because with all of the options that the consumer has right now, we need to be able to be there. So I think that's a real challenge for the companies.
Yeah. So the $1 million question, and I don't blame you if you don't have the answer to this, because I don't know if anyone does. How in your mind is Techmovil going to go about doing that, to trying to manage the customer expectations?
I think on our end, basically what we are doing is focusing on three things. The first one is our processes to be more agile, to ensure that we are giving the right experience to our consumers. Mm-hmm. The second one is to invest in software, invest in technology, because we know it's important to have all the systems that are connected, that we have a really, really automated process to fulfill orders, to understand the data, to make a very seamless experience for the consumer in the front end. And the last one is that it's not all about technology, right? So I try to share this mindset with the company anytime that I have the chance. But basically, it's strategy before technology. If we do not set the foundations for what we want to achieve in the future, it doesn't matter if we invest in the best technology right now if we don't know where we want to go. So I think that's the three main pillars that we are working right now into the company.
Mm-hmm. Terrific. That was a perfect place to end the first half of the show. Christian, thank you so much for hanging out with us today.
Thank you so much, Marcus. I really enjoyed to be here and hope you can have me another time later.
Yes, sir. Absolutely. Sounds good. Thank you so much, of course, to Matteo.
Thank you, Marcus. Always a pleasure to be here.
Yes, sir. So that's it for the lead story. It's time now for In Other News. First, a quick word from our sponsor, VTEX. Retail's next competitive threat may come from a business model or channel that didn't even exist a few months ago. This modern dynamic requires companies to adapt quickly, pivoting business seemingly overnight, something traditional commerce platforms just can't support. There's a new enterprise commerce platform on the rise, one that's fast, flexible, and doesn't require 9 months and $1 million to get up and running. Go to vtexvtex.com/eMarketer to learn more. Right, folks, we are back. Today we're joined for In Other News by one of our analysts on the retail and e-commerce team. It's Blake Droesch.
Hey, Marcus, how's it going?
Hey, chap, very good. Thanks for asking. How are you?
I'm good.
Good. Today, in other news, live stream e-commerce searches for an entry point in the US, trying to solve the fitting room dilemma, and rental services gaining popularity. Story 1. As live stream e-commerce searches for an entry point into the US, Mobile Marketplace Network launches 3 new shoppable shows and hosted the first virtual SneakerCon. Rice Insider Intelligence analyst Nina Getson. Retail Dive notes that the company has hosted 4 shopping festivals, they call them, generating over 10 million views each and leading to a total of 250,000 active buyers. Blake, the article goes on to explain how big of a deal live stream e-commerce is become in places like China. Where is the US at when it comes to live stream shopping?
Yeah, so when I wrote a report earlier this year on the live streaming landscape, I pretty much laid out that the stage has been set for live stream shopping to take off in the US in terms of social networks and retailers, as well as startups like Network, really building out ways for brands to sell on live streams, creators to monetize live streams. So the pieces are all in play right now, but I think at this point, we're still waiting for an indication to show that consumer adoption has really taken off, and that there is a significant number of consumers using not only social commerce, but live streaming social commerce. We do forecast live shopping in China. We don't forecast it yet in the US because it is such a small piece, but just to compare social commerce in general this year, we're forecasting that the Chinese social commerce market will exceed $350 billion, whereas the US social commerce market is going to be just over $36 billion. So when you look at sort of the bigger picture of social commerce and then say, okay, well, what is the live streaming component of that? The sheer size of both markets can sort of give you an indication of how far away the US is from China in terms of live shopping taking off. However, like I said, you have some of the biggest companies in tech investing a lot of money into live streaming and specifically live streaming commerce. So the pieces are in play for consumer adoption to take off, but we are still waiting for that to happen.
Almost seems unfair to compare any country to China when it comes to live streaming e-commerce, doesn't it? Because we estimate that live streaming e-commerce sales in China will go from 60 billion, 60 in 2019 to over 600 billion in 2023, from 60 to 600 in 4 years. That 600 billion would be 20% of all online sales in China.
And it's just a completely different type of activity in China. You have everything from snacks up to, limited edition apparel being purchased via live stream in China. In the US, the most successful operations so far have been programs like Network, which have used live streaming to drop limited edition products, and people are going in to really get access to the product and then leaving. Whereas in China, you have all types of just mass-produced items which are being, discovered and purchased via live stream. So completely different behavior right now.
Yep. Story 2, CNBC reporter Lauren Thomas writes that shuttered fitting rooms due to the pandemic angered shoppers and boosted returns. A Coresight research survey found 42% of US folks returned unwanted products from March 2020 to March 2021. Mostly clothing, which is returned at close to double the rate of electronics. So how are some retailers trying to solve the fitting room dilemma? Ms. Thomas points to a few examples. One mobile body measuring technology business, 3D Look, has a platform called Your Fit that lets shoppers virtually try on clothes and make sizing recommendations based on user data. 1822 Denim, one of the first brands to use 3D Look's technology about 2 years ago, says that its returns rate was nearly cut in half. Average order values went up and cart abandonments went down since it started using this technology. Blake, can this body measuring technology really solve the fitting room problem?
Yeah, I don't know. It's, we've yet to see a piece of technology that's been widely applied to virtual try-ons and has been, successful on a very large scale. It's not to say that that day, isn't coming, but it isn't something that we've really seen yet replace the tried and true going in and physically trying on clothes and shopping in stores. So eventually we are going to see an alternative that satisfies customers, but maybe never to the level of just going in and trying on clothes in the stores. But I guess the good news for retailers is that that's not really stopping the shift to purchases of apparel and accessories online. And right now we're forecasting that in 2021, just over 35% of apparel and accessory purchases will come from e-commerce, but by 2025 that's actually going to go all the way up to 55%. So that means the majority of apparel and accessory sales in the US are going to come from online. And this is something that is going to be here before you know it. But at the same time, the fact that we're already seeing it trend upwards without something that's been widely applied and successful in terms of this type of virtual try on does indicate that maybe it's not going to be a make or break thing with consumers, that they might be satisfied with the types of, take home, try on, and then mail it back, those types of programs. And it's going to be on the retailers to figure out a way to facilitate that where it doesn't cut into their profits.
Lots of retailers experimenting in this space. Walmart said back in May that it would be buying Israeli startup Zkit. Another data point of the top 10 reasons people return things, bought just to try on ranked number 7, according to a separate survey by Incisive and Newmine. And that CNBC article was saying people returned over $400 billion in merchandise last year. That's about 11% of US total retail sales, according to a study by the National Retail Federation, NRF. Clothing made up about 12% of that. Story 3, rental services are gaining popularity as consumers demand more sustainable alternatives, writes Richard Collings of Adweek. Because of this, outdoor apparel brand Eddie Bauer is working with rental services provider Arrive Outdoors to offer outdoor gear for rent. Mr. Collins points to other examples of retailers with rental services like Ralph Lauren and Taylor and Urban Outfitters. With Eddie Bauer's service, rented items can be shipped to anywhere in the contiguous US, including a customer's home, hotel, or a FedEx location. The shipment also includes a free return label. Blake, rental services gaining popularity. Is this a niche trend or something to really pay attention to?
No, I think it's something that really needs to be paid attention to. I think this time last year, a lot of sort of premature obituaries were written for the rental market, just given the concerns over, safety protocols with COVID. But we're seeing, even in the apparel where people are really bearish on the idea of people wanting to rent apparel again, but we're seeing that sort of come back. And I think as the trend grows, we're going to see more innovative ideas like this, where it's not just, a prom dress that's being rented. It's, outdoor gear. To stick with this example, if you're going to go camping, there were a number of local places where you could probably rent gear like this, or if you wanted to rent a kayak or, fly fishing gear or whatever. But now with some of the stuff moving online, it gives opportunities for brands like Eddie Bauer, other retailers to take advantage of the rental market, which is pretty huge. It just doesn't really exist online in a centralized way. Yeah,
I'm trying to think of some of the examples now, because I guess things like recording equipment.
Sure.
Maybe that could be, especially because Richard Collings of Adweek was saying that rentals offer a way to get hold of the appropriate gear for infrequent trips or outings, and also provide the opportunity to try out a product before committing to a purchase. So yeah, maybe someone rents some recording equipment, and then maybe they want to commit to a purchase because they like it so much. Maybe, I don't know, even things such as Lego.
Right.
Maybe, kids want Lego for a certain amount of time, a certain number of years, maybe even just a couple of months, perhaps, with how fast kids move from toy to toy. And so maybe there's a space for it there as well.
Everything, musical instruments, sporting equipment, all of this stuff, you could go and rent from a local retailer, but the fact that it's moving online, like I said, gives it the option to become something that's a little bit more centralized, so a bigger brand or a bigger retailer can facilitate it.
Yep, absolutely. That is all we have time for, unfortunately. Blake, thank you so much as always.
My pleasure.
Thanks to Victoria, who edits the show, and thanks to everyone listening. Thank you to Christian and Matteo, who joined us for the first half of the show, and we'll see you guys tomorrow for the Behind the Numbers Weekly Listen, an eMarketer podcast made possible by VTEX. You're like a small-time podcast host career ends in ruin. Okay, perfect. There we go.